as we move on from the COVID picture, we go into more of the economic data. Now, this chart shows PMI output, which is just kind of a measure of business growth in the US. So what you can see is from 2010 up to the pandemic, you had, fits and starts. This gray bar here denotes GDP growth, and everything kind of stayed in this, I'd say 65 to 45 range for the most part. Not, you had your ebbs and flows, but nothing really significant. Then obviously we run into the COVID situation here. You got a huge drop in GDP, a subsequent drop in output, and then we've had this boomerang recovery all the way up here. If you can remember back to the last presentation that we did, we talked a lot about base effect. And basically what we're seeing with the base effect is we're starting to roll off the year-over-year comparisons that we saw at the very bottom trough of the COVID outbreak, so to speak here. So we've seen really good rebound numbers, but there's now concern in the marketplace that we may have reached the peak of that growth. Not that the growth isn't going to continue, but that the rate of change or the rate of growth is not going to be as fast or accelerate at the level that some had predicted. Now, again, this doesn't mean that everything's going to turn around and we're going to all of a sudden go into this, recessionary environment. All it means is that I think when people look at the reflation trade and the things that were going to be the biggest tailwinds for that, if we have reached peak growth and we're starting to go and decelerate a little bit, that's going to, cause, I think, some investors to maybe begin to back off some of the investments that they made in the reflation trade and start to consider some other options going forward, or at least kind of take a more neutral stance until there's what I would say a little bit more clarity in terms of not only the COVID cases, but also in what we've seen in economic growth. Now, we've mentioned travel. Mike mentioned it earlier, that we've used this chart before as well. So this is the TSA checkpoint travel numbers on a 7-day average. So it really just denotes the amount of people that are traveling via planes in the country for a given week. So the 2019 here, the light blue line is kind of the normalized level of travel, so to speak. You've got the dark blue line here with COVID all the way at the bottom. And then you have this 2021 line in red. And then the dotted line here is a percentage of 2019. So what we can see is that since the beginning of the year, this number has continued to trend up and at a pretty good rate. So I think what it shows is that even with the advent of the new Delta variant, we still have people getting out. We still have people traveling. And when we're looking at pros and cons of reflation, I think we can argue that this is certainly a pro. And if this trend can continue, we're moving back to the level that we saw pre-COVID. Now, kind of a complementary thing to this would be hotel occupancy. So same story with this chart. The blue line here denotes the median level from the year 2000 to 2020. And you can see the red line is almost all the way back up to that level. So again, people are willing to go out, they're willing to travel by air, they're willing to go to hotels, they're willing to go out to eat. So the reopening that we've seen, although it may be slowing slightly, it's certainly showing the momentum that we expected to see as we talked about reflation for the past 6 months.